Hello, I'm Loda Smits for Australia's Finance News Network, and joining me today is the Senior Managing Director from New York-based investment bank Tangent Capital, Jim Rickards. Jim, welcome to Minds of Money here in London.
Thank you, Loda.
Jim, one of the most striking developments since we last spoke on Sydney's harbour in October last year is the gold price, which has shed about 30%. What do you believe prompted the plunge?
There are probably a number of things going on, not just one thing. I would expect that there is some central bank price manipulation. We know this goes on. This is not speculation. It's actually disclosed in certain ways. But, you know, whenever you're trying to solve a crime, you say, who has the motive? The person with the greatest motive to keep the price of gold low is actually China, because they have the most to buy. So people point a finger at the Fed, but you might suspect China. But also hedge funds are involved. Traditionally, hedge funds were not very involved in gold. They are now. Hedge funds don't care if they trade, gold or baseball cards. For them, it's all about making money. And they engage in manipulation. And the enforcement side in the United States is very weak right now. So it's almost an invitation for hedge funds to come in and play games. So there are a number of things going on, some of them technical.
And did you see it coming?
When it got to 1900, I thought that was a little bit of a spike. Now, I don't think it's a bubble, because you have to look at fundamentals. The fundamental price of gold will be much, much higher. But when again, it doesn't matter if it's gold or any other commodity or stock for that matter, when it runs up that far, that fast, you can expect a pullback. I didn't necessarily expect to pull back to these levels, but it's interesting. We've tested the kind of 1250 level 3 times, and there does seem to be a floor there. I call it the Chinese floor. They do need to buy at the end of the day.
So where are we likely to see the gold price heading into 2014?
Well, it really depends on the battle between deflation and inflation. Ultimately, I see gold much higher. As you know, Lel, I see it at $7,000 or $9,000 an ounce, possibly higher, based on fundamentals and based on a loss of confidence in the existing international monetary system. But if it did go lower, that would be a very powerful price signal that deflation is winning the battle. There's a battle between deflation and inflation. I think ultimately inflation will win because central banks will insist on it. But in the short run, deflation could win. That could take a little bit lower.
And Jim, I hear you've been visiting some gold vaults and refineries recently. So with the price so significantly down from its highs, have you been tempted to buy up?
Well, actually, yes. I just launched a mutual fund with some partners, and we've made a major allocation to precious metals, gold, but also silver, platinum, and palladium. So, yeah, I think this is, for our fund, we think this is a great entry point.
Okay, if we can have a look at Bitcoin now, it has, of course, gained traction since we last spoke, recently surging to all-time highs. What role do you see the virtual currency playing in global economics?
Well, Bitcoin's an interesting phenomenon. I've actually read a number of the technical papers, a number of legal briefs on them. I'm not anti-Bitcoin or Bitcoin basher. I don't invest in them personally. I don't recommend them to clients. I understand them technically. They seem to appeal to technophiles and libertarians. The only thing I say to Bitcoin people is watch out for a couple of things. Number one, if you buy a Bitcoin at one level and you redeem it for goods or services at a higher level, you have a taxable gain you have to put on your tax return. I dare say very few people are doing that, so they've all sort of become tax evaders. And a lot of people think if you're in the Bitcoin cloud, the government's not watching. They are watching. So consider the fact that you may be a tax evader and the government's looking over your shoulder. This will play out in time. So there's a little bit of a caution in the Bitcoin world.
You've just given a presentation here at Minds of Money on the outlook for precious metals and the global economy. So have precious metals prices bottomed out, or are we headed for a recovery?
We know everything's contingent on the economy, Lola. Precious metals prices don't move in a vacuum. They send you price signals in response to the economy. So if inflation takes off, they'll go much higher. If the international monetary system collapses, they'll go up by a factor of 5 or 10. But if deflation gets us in that script, they could go down in nominal space, but they might outperform other asset categories in real space.
And what are you predicting?
I think that the Fed and the other central banks are going to win the battle. Deflation is the natural state of the world, but central banks fear deflation so much that they're going to force inflation to happen. The problem is when they get a little inflation, they're going to find that they've got a lot of inflation. That's going to take precious metals prices up much higher. But, it might play out over several years. I'm not saying this will happen in 3 to 6 months.
But in the short term, optimism is high on global equity markets, and many are predicting an upbeat 2014. Do you agree?
Stock prices will continue to go higher as long as the Fed and other central banks are pumping out money. So it is a bubble. It will end badly. People will find that this crashes 30 to 40% in a matter of weeks, maybe even less. But for the time being, I expect stock prices will go higher, but not for the right reasons.
So finally, Jim, what's your best advice for investors heading into 2014?
Well, as I say, I recommend investors have 10 to 20% in gold or other precious metals, 10% for the conservative investor, 20% for the more aggressive investor. This will serve you well in inflation, deflation, war and peace. So it really is it's an insurance policy. Everyone should have it. Not all in, but 10 to 20%.
Jim Rickards, thank you for speaking with us here in London, and thank you as always for your insights.
Thank you, Lola.